Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I was looking through some of the articles and I was coming across some oil prices that options traders are starting to bet on. And I just wanted to kind of touch on that. It doesn't matter what other people necessarily think. I'm just touching on it to let you guys know what other people do think. So let's dive into these articles here real quick. It says option traders are betting on $300 oil. This article was written November 12th. It says option traders traded an equivalent of 5 million barrels of Brent at $250 and $300 call options. The resurgent activity with bets on $100 or $200 oil shows that more traders are getting into the energy market amid the global energy crunch. Adventurous option traders placed bets this week on oil prices hitting $250 and even $300 per barrel, betting for the first time this year that oil could exceed $250. ICE Futures Europe data cited on Bloomberg showed. So 5 million barrels of Brent at $250 and $300 call options. Call options give traders the right, but not the obligation, to buy assets at certain price, the so-called strike price by a certain date. The amount of call options at triple-digit strikes have soared in recent weeks, suggesting that more speculative traders are attracted by potential quick profits from option trades, which are relatively low-cost ways to speculate on the direction of an asset. With $250 per barrel bets are the first call options traded this year. Some traders have already bet on $200 and $215 oil in recent weeks. Last month, exchange trade data showed that the oil price hit multi-year highs. Some speculative traders are betting on the options market that oil could exceed $100 a barrel by the end of this year, and even reach a record $200 per barrel by the end of 2022. The resurgent activity with bets on $100 or $200 oil shows that more traders are getting into the energy market amid the global energy crunch. More of these speculators are bullish on oil prices. Most recently, Bank of America said that Brent crude prices could rise to as much as $120 per barrel in the first half of 2022 due to the global gas crisis, booming air travel and international flights returning, and a comeback of Asian demand. Here's another article. An oil trader is reportedly betting crude oil or crude prices will soar more than 200% amid the inflation spike. See, now they're talking about the inflation spike and the energy crunch. Those are the two things that I always talk about that commodities get priced. It's inflation, because of the dollar, and then you've got your supply demand. So let's jump right here. It's traders hitting the same thing. It's basically the same article here, but the demand is being met with a supply deficit, with the world's top oil producers modestly increasing output after slashing its during the height of the coronavirus crisis. Rising energy prices were the main drivers of the spike in U.S. consumer price inflation. I'm wondering if this is going to be like a self-feeding back loop where oil prices go up, they see inflation going up, and then it feeds back into inflation. Now, looking at all the charts, the oil charts. Let me pull one of them up just to kind of give you guys an idea, and I do show this quite a bit. So we're going through here. There we go. Oh, so let's see if these claims are going to have any foundation for support. So what I did here is I've got the crude oil price. This is almost a reverse head and shoulders, very similar to it. You could even do the neckline up here, do it straight across, but huge numbers if this actually plays out. We already broke to the upside and are just starting that move. That's what a measured target and inverted head and shoulders looks like. Same thing. So yes, this is supporting, at least this chart here, supports a move that could potentially go to these levels that are kind of unthinkable. We've got the CRB index outperforming the S&P 500. We got the monetary base that is super cheap. There's the head and shoulders. Now, looking at some data for the head and shoulders here. The reverse head and shoulders pattern offers good performance on a bearish trend. Some statistics about the reverse head and shoulders follows. In 98% of the cases, there's an upward exit. In 97% of the cases, there is a pursuit of the bearish movement at the breakout of the neckline. So it breaks out and then it comes back after it breaks out. And that's what we're doing right now. In 74% of the cases, the target of the pattern is reached once the neckline is broken. 74% of the cases. That is really high. In 52% of cases, a pullback occurs on the neckline, which is happening right now. Here's the oil to gold ratio on a really long-term chart from 1950. What happens is you come in, you basically get a pattern, and then you break that pattern. This one broke to the downside. We had this huge expansion and contraction of the pattern from 1985 all the way to 2021. Now we're breaking to the upside here right now, the oil to gold ratio, which means that this oil to gold ratio could compress quite dramatically over the next year, 2 years, 3 years. In this ratio, you do have a shoulder, zoom in here, you do have a shoulder, a head, and then a shoulder developing right here where this thing could launch higher all the way to 0.1 maybe with this size of a, or somewhere in here. It's there though. So that's ridiculous. Now look at the crude oil to S&P 500. Yeah, we're getting a breakout right now, guys. This one I did in 14th of October. It's a month old, but it's up even higher than this. In fact, let's look at it. I use stock charts so you guys can see what I'm doing. This is, I think it was the SPX. Oops. I used oil to SPX. So let's look at oil to SPX. We're at 0.0173. I keep going back to that one, apparently. 0.0183 is what it was when I did this. So we're right there, breaking out. So yeah, the data supports it. So I don't see why it couldn't do it. I mean, it's possible. Doesn't mean it will, but it's possible that these charts support much higher prices. Will it hit 250 or 300? I don't know. In a year? In a year. Now, there's certain opportunities out there. If you look where there's warrants and stuff on companies where they're getting priced at basically nothing. So there's one that's a stock around $17, $18. There's a warrant for $41. It's a little over a double, but it's trading at literally nothing. They think it's going to expire worthless. If this were to occur, you could buy those warrants for super cheap, literally like free, on a long shot that this would actually work. But the payout would be massive. Because if let's say it gets to $50, and let's say those warrants are like $9 or $10. Now, this is a huge stretch here. So if you have warrants that were valued at like $9, I'm just throwing it out there, and let's say you're paying 7 cents for it, your upside could be 128-fold. And let's say you put like $1,000 in it, like just kind of throw away money. I mean, it could be $128,000 in like a year time frame, or even more. We'll see. But I've been kind of thinking about it. Just, I mean, I'm not going to put a lot in there. Maybe I put $400 or $500 or something like that. Because if this were to happen, I mean, that stock would probably moonshot all of the energy companies. But put a little in there. It's a huge leverage move. I just wish that the warrant strike price is $41. It's at 17 something, I think, now. And it expires, though, October of 2022. So it's like, it could do it the summer. It's kind of risky, but it's a huge asymmetric bet. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.